In 1974, a secret deal made the US dollar the king of global oil. Today, a single handshake between Saudi Arabia and China could bring that empire to its knees. No missiles, no sanctions, just oil, priced in a new language. We're talking about the most powerful currency on Earth and the quiet alliance that might replace it. For over 50 years, the world had to buy oil in US dollars. That wasn't just economics, it was dominance. But now, Saudi Arabia and Beijing are changing direction. And they're not just trading oil, they're trading the future of the dollar. This isn't just a story about money. This is the blueprint of American power and how it might unravel one trade at a time. Stay with us, because the next 20 minutes might change how you see every war, every sanction, and every dollar in your pocket. It didn't start with oil, it started with gold. In 1944, as World War II came to a close, 44 countries gathered in a small town called Bretton Woods and designed a new world economy. And what they agreed on was this: the US dollar would become the center of the global financial system, because it was backed by gold. 1 ounce of gold was worth $35, and anyone, any central bank, any country could exchange dollars for gold at that fixed rate. For the next 2 decades, the system worked. But by the late 1960s, America was no longer the stable lender of the world. It was a country drowning in debt from the Vietnam War, printing money far beyond its gold reserves. Foreign governments began calling America's bluff, redeeming their dollars for real gold, draining US reserves. So in 1971, President Nixon shocked the world. He ended the gold standard. Overnight, the dollar was no longer backed by anything but confidence, and that confidence collapsed. The dollar dropped, inflation soared, oil prices, measured in dollars, skyrocketed. For the first time, the American economy looked vulnerable, and that's when the secret deal was made. Behind closed doors, US officials flew to Riyadh, to the Kingdom of Saudi Arabia. They weren't there to talk about oil, they were there to build a new empire, a dollar empire. The agreement was simple. Saudi Arabia would sell all of its oil exclusively in US dollars. In return, the US would provide weapons, military protection, and diplomatic cover to the Saudi monarchy, no matter what. By 1974, the deal was sealed, and within a few short years, every major oil-producing nation in OPEC followed. Now, if Japan wanted oil, it needed dollars. If Germany wanted oil, it needed dollars. Even if they were trading with Saudi Arabia, they had to go through the US financial system first. This wasn't just about convenience, it was control. The global demand for US dollars surged. America could now print money with their near impunity, and the world would accept it because it needed oil. The petrodollar system was born. It gave the US 3 unfair advantages. First, unlimited global credit. America could borrow endlessly. Second, artificial demand for its currency, ensuring strength regardless of debt. And third, financial surveillance power, as most oil transactions flowed through US banks. The petrodollar fueled Wall Street growth, military expansion, and foreign aid dominance. Countries that didn't comply, like Iraq or Libya, faced sanctions, invasions, or worse, not for what they did, but for what currency they dared to use. For the rest of the world, the dollar became more than money. It was oil's passport, and whoever controlled that passport controlled the global economy. But the US made one critical mistake. It assumed that Saudi loyalty was forever. What it didn't expect was that one day the kingdom would find another customer, one larger than America, one hungrier for oil, and one willing to pay in something else. That's where China enters the story. It didn't happen on stage, there were no headlines, no breaking news alert on your phone, just a quiet room in Riyadh, 2 men, 2 nations, 1 handshake. Saudi Arabia's Crown Prince Mohammed bin Salman and China's President Xi Jinping. They weren't signing a defense pact, they weren't launching a war, they were signing oil deals. But not in dollars. For the first time in half a century, the world's largest oil exporter and the world's largest oil importer made a choice to price oil in yuan. China's currency, not as a symbolic gesture, but as a real transaction. Billions of barrels, billions of dollars, now bypassing the dollar entirely. That handshake marked the beginning of a quiet revolution, a reprogramming of the global financial operating system, and almost no one noticed. But for those who understand the petrodollar, it was seismic, because Saudi Arabia wasn't just any oil supplier, it was the pillar holding up America's economic throne. And China wasn't just any buyer, it was now purchasing over 25% of Saudi crude exports. So far, China had to pay in dollars like everyone else, but as tensions with the US grew, over trade wars, sanctions, and Taiwan, Beijing began building its own escape routes, and Riyadh, once America's most loyal partner in the Gulf, saw something it hadn't seen before: options. In recent years, Saudi Arabia has signed over 30 cooperation agreements with China, spanning everything from infrastructure to 5G to AI surveillance systems. But the oil deals, those are different, because oil isn't just a product, it's the foundation of currency supremacy. By accepting yuan, Saudi Arabia sends a signal to the world: we don't need to sell oil in dollars anymore. And that signal is contagious. Iran already sells oil to China in yuan. Russia has shifted most of its oil trade away from dollars since US sanctions. Now Saudi Arabia, once the crown jewel of the petrodollar, is quietly following the same path. It's not just the currency, it's the infrastructure being built around it. China is pushing for an oil futures market in Shanghai, settled in yuan. It's developing its digital yuan, already tested in cross-border oil settlements with the UAE. And it's creating global clearing houses outside of SWIFT, so transactions can flow beyond America's reach. This isn't a single switch, it's a shadow system being built brick by brick. And every time a barrel of oil is traded in yuan instead of dollars, the shadow system gets stronger, and the dollar's monopoly gets weaker. The handshake may have been quiet, but its message is deafening. The petrodollar is no longer untouchable, and the empire it's built is now standing on sand. The US dollar is often described as stable, trusted, strong. But behind that strength is a truth most people never think about. The dollar isn't powerful because it's backed by gold, it's powerful because it's backed by demand. And that demand is artificial. It exists because nearly every country on earth needs dollars to buy oil, to settle trade, to hold in their reserves. This isn't just convenience, it's dependence. And that dependence is what gives America its financial superpowers. It allows the US to print money at a scale no other nation can, to run trillion-dollar deficits without collapse, to finance wars, bailouts, and stimulus packages, all with debt the rest of the world willingly buys. Why? Because that debt is priced in one thing everyone needs: dollars. But what if that need disappears? Imagine you're a country like India or Brazil or South Africa. You import energy, you store reserves, you owe foreign debt. For years you've done it all in dollars because the oil market required it. But now Saudi Arabia is accepting yuan, Russia is accepting rupees, Iran is accepting gold and barter, and China is building an entirely separate system, from trade routes to currency swaps that bypass the dollar completely. Suddenly your need for dollar drops and you start selling them off. This isn't hypothetical, it's already happening. Between 2000 and 2023, the dollar share of global reserves fell from 73% to under 58%. In just the last year, central banks sold more US debt than any point since records began. The dollar is still dominant, but the direction is clear. And what's replacing it isn't one currency, it's many. A patchwork of bilateral trade deals, regional coins, digital currencies, and commodity-backed swaps, all designed to move the world away from Washington's reach. Why does that matter? Because if fewer countries need dollars, it means the US can't print as freely. Interest rates must rise to attract buyers, the national debt becomes heavier, and inflation creeps in. More dangerously, America loses its most silent form of power, the dollar as a weapon. For decades, US sanctions worked because they cut enemies off from the dollar system. No dollar access meant no oil, no trade, no finance. But now, countries like Russia, Iran, and China have built workarounds. They've been forced by pressure to create independence. So the next time the US threatens sanctions, it faces a new reality. Its target might not need the dollar anymore, which means the threat no longer works. And for the US, that's not just a financial problem, it's a geopolitical one, because power doesn't come from military might, it comes from the ability to control what others need. The petrodollar was the foundation of that power. Now, with every handshake made in yuan, that foundation cracks, and when it breaks, it won't be loud. Markets won't crash in a single day, there won't be a clear before and after. Instead, the dollar will simply matter less, trade by trade, month by month, until one day the world wakes up and realizes it's already happened. And while Western analysts debate whether the petrodollar is at risk, China has already started building its replacement with infrastructure. This is the genius and danger of the Chinese model. They don't try to destroy the current system. They quietly build another one next to it, then wait for the world to switch. And oil is the centerpiece. For years, China has been securing long-term energy contracts with nations willing to accept yuan. Russia, Iran, Venezuela, Angola, even Saudi Arabia now. But this isn't just about currency swaps, it's about systemic integration. In 2018, China launched the Shanghai International Energy Exchange, the first oil futures market dominated in yuan. It allows global players to price and settle oil without ever touching the dollar. At first it was small, experimental, ignored. Today it handles billions in transactions, and it's growing fast. Behind the scenes, Beijing has pushed oil suppliers to accept yuan for trade, then immediately convert that yuan into gold on the Shanghai Gold Exchange. It's a clever workaround. Producers still feel like they're receiving a hard asset, but China keeps the trade in its ecosystem. They've essentially built a backdoor gold standard without ever calling it one. And then there's the digital yuan. Unlike Bitcoin or Ethereum, this isn't decentralized. It's fully state-controlled, programmable, trackable, and cross-border compatible. Already, China has tested the ECNY in international oil settlements with the UAE, Thailand, and Hong Kong, and they're developing a blockchain-based international settlement network known as mBridge, involving the Bank for International Settlements, UAE, Thailand, and others. The goal? To build a non-dollar digital corridor for global trade. But China isn't doing this alone. In 2023, BRICS, the economic bloc of Brazil, Russia, India, China, and South Africa, began formal talks to launch a common currency for trade. Not to replace national currencies, but to settle cross-border energy and commodity flows outside the dollar. And now, with Saudi Arabia and Iran both invited to join BRICS Plus, that plan has real weight. You can see the map forming: oil from Iran and Saudi Arabia, shipped to China and India, paid for in yuan, rupees, or a BRICS coin, settled over digital rails, stored as gold in Shanghai or Moscow. This is no longer theory. It's a new ecosystem, live and expanding. And every time a new contract is signed in yuan instead of dollars, that ecosystem gets stronger. China isn't trying to dethrone the dollar with force, it's simply making the dollar less necessary by offering alternatives, faster, cheaper, politically safer. It invites countries to opt out of US control without a fight. And it's working. In 2024 alone, China's share of global oil settlements in yuan doubled. Central banks across Asia and Africa increased their yuan reserves by over 30%. And even Western companies like Total Energies in France have begun using yuan for energy purchases. This is how empires shift now, not with war, with code, contracts, and quiet exits. And the longer America ignores it, the more irreversible it becomes. For years, Saudi Arabia and the US were inseparable. One supplied the oil, the other supplied the weapons, the security, and the global influence. It was never a friendship, it was a transaction. But in the last decade, that transaction started to feel lopsided, and Riyadh began to notice. America's appetite for Saudi oil declined sharply after the US shale boom. Domestic energy independence meant fewer tankers from the Gulf and less urgency to protect the oil routes Saudi Arabia relied on. Then came Washington's lectures on human rights, on Yemen, on Jamal Khashoggi, public condemnation, private friction, all while China showed up with investment and no judgment. At the same time, the US pulled out of Afghanistan. It reduced troops in the Middle East, and it sent a new message to its old allies: you're on your own now. For Mohammed bin Salman, the de facto ruler of the kingdom, this was more than policy. It was personal. He's not just leading a country, he's trying to reshape it through a grand economic overhaul called Vision 2030. The plan requires the diversification beyond oil, a massive infrastructure development, technological modernization, and foreign investment. Fast. And China fits that agenda perfectly. China doesn't just want Saudi oil, it wants to build the roads, the ports, the surveillance networks, the smart cities. It wants access, and in return it offers something America won't: non-interference. To MBS, that's invaluable. More importantly, China is becoming the kingdom's largest customer. By 2025, over 1/4 of Saudi oil exports are heading east, and that number is climbing. So Riyadh asks itself a simple question: why keep pricing oil in dollars when our best customer pays in yuan? The benefits of switching, even partially, are clear. Diversification, that reduces exposure to US financial sanctions or interest rate shifts. Political autonomy, which means no longer hostage to Western approval. Financial flexibility, and so the ability to tap into new investment channels and central bank reserves. Strategic balance, to play China and the US off each other for better deals. But it's not just about benefits, it's also about hedging risk. Saudi leaders see the writing on the wall. US debt is at record highs. Domestic division weakens long-term stability. Inflation threatens the dollar's credibility. And more countries are questioning the system. So if the global tide is shifting, Saudi Arabia doesn't want to be caught on the wrong shore. It's not about abandoning the dollar overnight. It's preparing for a world where the dollar might not be king. Call it strategy neutrality, call it hedging, call it realism. But whatever name you use, the effect is the same. The kingdom is slowly backing away from the very system it helped build. And once the gatekeeper of the petrodollar opens new doors, it becomes harder, politically and economically, for other nations to stay loyal to the old model. The dollar didn't fall out of favor, it was replaced, first by choice, then by necessity. And Saudi Arabia, once the crown jewel of the American financial empire, is now writing its own playbook. For most people, global finance feels distant. It's the kind of thing discussed in boardrooms, news tickers, and academic papers. But when the dollar begins to lose its special status, it doesn't just shift power at the top, it changes the ground beneath your feet. Because whether you live in New York, London, Mumbai, or Lagos, your daily life is already tied to the strength of the US dollar. And that strength is built on trust that the world needs it. If that need weakens, the effects are not theoretical, they're personal. Let's start with the value of your money. The dollar today is propped up by constant foreign demand. Central banks stockpile it, companies borrow in it, nations trade with it. But if fewer countries need dollars to buy oil, those same countries will start selling off their reserves. They'll buy yuan, gold, or local currencies instead. That creates downward pressure, and as the dollar falls, import prices rise. Think groceries, gas, electronics, medicine. Much of it is imported. Even a modest dollar decline can send costs surging for the average consumer. Now look at interest rates. Right now, the US can borrow cheaply because global investors always want dollars. It's what allows America to run $30+ trillion in national debt and still function. But what if fewer countries want to hold that debt? Suddenly, the US Treasury must raise interest rates to attract buyers. And when government borrowing gets more expensive, everything gets more expensive. Mortgages, credit cards, small business loans, student debt. For the average American household, it means monthly payments balloon without your income going up. And it doesn't stop there. The ripple hits the job market. A weakening dollar makes imports more expensive and business overhead rise. Some companies pass that cost to consumers, others cut workers, and when inflation rises faster than wages, your purchasing power evaporates. Now imagine the global consequences. Emerging economies often hold US debt and trade in dollars. If the dollar weakens, their debt burden rises overnight. Many already struggling countries could see currency collapses, sovereign defaults, and financial chaos. And what does that create? Mass migration, civil unrest, political instability. The kind of global domino effect that fuels wars, famine, and radicalization, all starting from a handshake in a boardroom you'll never see. But here's the twist. Even if the dollar doesn't collapse, the mere perception that it might is enough to cause damage, because markets don't wait for proof, they react to signals, to headlines, to deals done in silence. And the shift away from the dollar isn't just happening in theory, it's already reflected in numbers. US dollar reserves shrinking globally, oil contracts in yuan rising, central banks diversifying out of the dollar, digital alternatives gaining real traction. The system hasn't broken yet, but it's moving. And when a system built on trust starts losing believers, it doesn't crash, it decays. So how does this affect you? It affects the price of your food, your rent, your loan, your job security, and your government's ability to protect and support you. Because the dollar isn't just America's currency, it's your currency, whether you live in the US or not. And if that currency begins to lose its crown, you'll feel it. Not in TV, documentaries, or newspapers, but in your home. Most people imagine the fall of a global empire as something dramatic. A crash, a war, a sudden collapse broadcast live. But in reality, empires don't fall with explosions. They fade, choice by choice, deal by deal, silence by silence. And that's how the dollar's reign could end. There won't be a breaking news alert saying the US dollar is no longer the world's reserve currency. There'll be no funeral, no formal declaration, because the dollar won't be replaced overnight. It'll be reduced over time. It'll still exist, it'll still be strong, but it will matter a little less every year. It begins with oil deals in yuan, then bilateral trade in rupees, then digital payments settled in central bank tokens, then SWIFT alternatives like Russia's SPFs or China's SIPs quietly gaining adoption. Each move seems small, insignificant, but it's like erosion. You don't see it until the cliff's gone. And the cliff, in this case, is America's financial dominance. What made the dollar untouchable wasn't just its use, it was the lack of alternatives. Now, the world is building options. China's digital yuan, a BRICS trade currency, gold-linked settlement rails, regional trade agreements in local currency, stablecoins backed by oil, gold, or commodities. These aren't gimmicks, they're insurance policies, and more countries are buying in. What does this mean for the US? It means the world no longer has to ask permission. They can trade without fear of sanctions. They can store wealth without trusting Washington. They can finance growth without obeying dollar discipline. In the US, it begins to lose what economists call the exorbitant privilege. That privilege that's allowed America to run massive deficits, borrow at low rates, inflate the money supply and fund global wars without collapsing its own economy. If the dollar loses that status, even partially, the US must start living like every other nation, within its means. And that transition is brutal. Think austerity, think higher taxes, think weakened global influence. Meanwhile, countries that moved early, like China, Russia, and now Saudi Arabia, gain not just leverage, but insulation. They won't have to ask what if the dollar falls because they'll already be free from its grip. This is the endgame. Not a war, not a crash, but a transfer of gravity from west to east, from dollars to diversity, from monopoly to multipolarity. It's not about whether the dollar disappears, it's about whether the world still needs it. And if it doesn't, the US loses not just a currency, but a century of invisible power. And all of it traced back to a single handshake, made quietly in a room most people never saw. One thing is clear, empires don't fall when they're attacked. They fall when the world quietly moves on without them. If you enjoyed the video, subscribe now for more cinematic deep dives into the hidden empires shaping your world. Thanks for watching, you guys. You're a legend. See you in the next one. Your desire, your empire.